Hi, this is Zak Mir of zaksta.com with a look at leading UK companies reporting from the week beginning the 25th of November. And I'm starting off with Royal Mail Group, where we have not much price data, but there seems to be enough here probably to make a decent estimate as to what might happen next on the price action front. I'm thinking that there is a line of support here from mid-October, or when the shares hit the market, running through the 533 or low 530s zone, and price channel top heading towards £6.50. Obviously, this is quite a bullish stance given how much the shares have already gone up, but what you could do is wait for at least an end of day close back above the 10-day moving average at £5.51, and then use that as the buy trigger to target another £1 or so upside over the following 4 to 6 weeks. Obviously, if you're a bear, you would say that below the 10-day line, we could keep retracing a little bit more from the best levels at the beginning of November, maybe back towards the £5 zone. But at the moment, rising trend channel there and a chance of a fresh leg higher. Cranswick is up next, and here we see that the shares have been struggling of late. Looks like a bit of a sort of a bull trap through the 50-day moving average. Also a bull trap through the top of that gap to the downside at the beginning of October. The floor there was £11.34. But really, the best thing normally in such situations is that you wait for a proper break. The shares have sort of traded one way and the other after the gap down, and there's a chance that we're in a triangle formation since the beginning of September, and you'd wait either for a clear break of, say, at £10.50 or £11.50 really before making your mind up on the direction of the stock, or the main direction of the stock. Probably at the moment you'd favour, obviously, with the RSI below 45 and below, at 45 and below neutral, you'd favour a test for support at around £10.50. So slightly bearish angle there on Cranswick. Moving along to Severn Trent, and it can be seen here that we've got consolidation here after a horrible looking island top reversal from May and June. Really, that can be enough to knock out even the most strong of stocks or markets. But the stock has been trying to rehabilitate itself. Generally, support coming in at or just below the 200-day moving average, now at £17.68. And also, there's a line of support from June running just below that figure. So at the worst here, probably you'd be looking for a £17.50 to £19 range, equivalent to what we've seen over the past month for the rest of the year. And if we're really lucky, if we can break through, say, £18.50 on a reasonable basis this week, we could get up to what is a mid-channel resistance line target as high as £20 over the following 1 to 2 months. So mildly positive there for Severn Trent, but and at least no continuation yet seen of the May-June breakdown. Staying with the utilities zone, and it's United Utilities, and we've got here what seems to be much more of a determined type of move here, with the breakdown from May and June starting to followed by consolidation, but now starting to see a break to the downside. The key area in the near term is probably the September floor at £6.70. We broke that on a weekly close basis on Friday, and so now really there's a risk that we'll head back down towards the 630, 640 zone at least before a lasting recovery can take place. But this is a stock under pressure. All the near-term moving averages are falling, and a break of June support at £6.50 really would be slightly painful at this stage in terms of having negative technical implications. Finishing off with all bar one owner, Mitchells and Butlers, company that I quite appreciate, given that in their establishments there's free Wi-Fi, which obviously helps somebody who's trying to work on the move. Current situation here is we've got an April rising trend channel based at the 200-day moving average at £3.80. The shares are trying to react off that in a positive way. Decent sort of RSI configuration as well after the bear trap below October support. and so we're really expecting a new leg to the upside here. If you're cautious, you'd wait on an end of day close above the 50-day moving average at £4.03, but otherwise probably above 380, maybe down to 370, allowing some wiggle room. You'd be looking for a new leg to the upside, and as high as £4.80 over the next 1 to 2 months once the 50-day moving average breaks. That's it from me. See you again next time.